Good morning, everyone. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, I would like to welcome you all to a new week and thank you for joining us on our breakfast meeting today. It is Monday, the 22nd of March, 2021. On our agenda today, we'll get a rundown and outlook for the fixed income and equity spaces for the traders for those respective markets. After that, we will move to our media partners and Frontier Africa Reports for their own updates. Please note that this meeting is being broadcast live on our Vetiva online page on Facebook and is also being recorded. The audio file may be shared with third parties. This meeting is set to last for 30 minutes inclusive of Q&A. Our attendees for today will be given a chance to ask their questions after all speakers are done. We will now start off with we will now start off with Sheung we will now start off with Sheung for his take and outlook the for the equity space. Good morning, Sheung.
Thank you very much, Idozi, and good morning, everyone. We start from markets across West Africa as we look at performance in the BRVM and Ghana Stock Exchange. In BRVM, the market ended positive on Friday with the composite index closing 149 bips up, translating to a 1 week gain of 2.42% and moderating the year-to-date loss in that market to negative 2.54%. Quickly to Ghana, the Ghana Stock Exchange continued on its impressive run, closing 2 basis points up for a weekly gain of 81 basis points. This is improving the year-to-date return of that market to 13.06%. And MTN Ghana continues to drive the positive performance we've seen in that market year-to-date. So back home to Nigeria, we saw the market ending the last trading session on a negative note, down 136 bips, which is on the back of sell-offs in industrial goods sector as Bois Cement, which was down 642 bips, and Dangote Cement, that was also down 342 bips in the last trading session, pulled the market. We also saw another heavyweight, which is an MTN, also contributing to the negative close. MTN was down 181 bips on that day. We continue to see interest in the banks, mostly the tier ones, as the likes of GTB, Zenith, and UBA all closed well in the green. Though this positive performance in the banking sector could not sway the market to the green, we believe investors continue to react positively to GT Bank's full year results, which is also rubbing off on those other tier one banks. Generally, for the sectoral performance, we saw the banking sector closing 280 bips up in the last session, which, like I mentioned earlier, which is on the back of sustained interest in the tier one banks. We saw investors beginning to reinvest their dividend in the market, especially for Zenith Bank. And we believe this trend should be sustained into today's session as foreign portfolio investors struggle to repatriate proceeds. Also, for the sectoral performance last week, on Friday, industrial goods was down 440 bips on the back of significant losses we saw in Dangote Cement and Bois Cement. Consumer goods closed marginally positive, while oil and gas was down 22 bips. For market activity, this was largely driven by the banking sector, which accounted for over 70% of the market turnover. Um, though these figures dipped compared to the previous trading session, with all this, the bearish run was sustained at the local bourse on Friday as the ASI again slipped 69 basis points week on week, pushing the year to date further to negative 4.96 basis points, 4.96%, pardon me. Then going into the week, we anticipate missed sessions as investors continue to stay cautious, while further sell-offs in early session in the week may spur some interest based on cheap valuation and an attractive yield. Um, Also, we believe investor will be for the week. We believe investor will particularly be on the lookout for the outcome of the MPC meeting um, set for today, with the outcome coming out, with the report coming out tomorrow. So they will try to see if there will be indication on rate direction, which will definitely guide investors' decision going into the week. We also believe that market will look out for any other better than expected full year 2020 results to also take a cue from. So that will be it for the equities market. Thank you.
Thank you, Sean. We will now move to Omar Gay for his outlook on the fixed income space and
Good
currencies.
mo-
Good morning.
Good morning. Good morning, everybody. I'll quickly start with the money market. There was a monumental increase in system liquidity on Friday. Our system opened 468 billion positive, coming from 268.31 billion positive, where it opened on Thursday. Despite the improved system liquidity we saw on Friday, money market rate tightened to trade between 20% to 30%, coming from between 12% to 15% we saw on Thursday. This increase in money market rates was largely due to two major events that happened on Friday. The first one was the FS retail auction, which aired on Friday, and that drove the demand for funds as market players tried to fund for their auction bids. Also, the second event was the CRRO debit, where about 289 billion was taken away from the system, and this significantly reduced system liquidity. So our expectations for today is that money market will trade at lower levels on the back of reduced funding pressure today. So moving to the FS market, so the parallel market remained flat to trade at 485 naira to a dollar. There an in window traded at a high of 412 naira to a dollar, closing at 410 naira to a dollar. We witnessed significant decline in I&E turnover on Friday as it closed at $46.42 million on Friday, coming from the $98.2 million where it closed on Thursday. We expect the Naira to continue to trade at these levels, barring any significant policy change by the regulator, and that's the CBN. Moving to the T-bills market, as expected, the T-bills market closed last week on a very active note, with investors continuing to look for high returns in the OMO space. We also saw sustained demand for the long-dated OMO papers, especially the March papers. The intense demand for the long-dated OMO papers drove offers on that end to sub 8% levels, coming from above 8% levels we saw in the previous trading sessions. We also witnessed intense demand for the newly issued one-year paper. We saw offers on that end hit about 6.6%. That's basically 40 basis points lower than where it was issued at the auction, which was 7%. Overall, a few trades were consummated across the curve in both the NTB segment and the OMO segment. And this was largely due to the disparity between the bids and offer, and also because a lot of players just decided to trade cautiously. So our expectation for today is that the T-bills market will trade on a very quiet note, given that players will wait for the outcome of the bond auction and the MPC auction that is also happening this week to get clarity as regards interest rate direction. I'll conclude with the bonds market. The bonds market closed last week on a mixed note. We saw sellers on 2026 maturities and longer dated, the 2034, 2036, 2049, while we also saw buyers on the short-dated maturities, especially 2023, 24, and the 2025, with just few trades consummated on that end. Overall, the rate curve shifted about 21 basis points higher last week. Our expectation for today is that the bonds market will also replicate the quiet theme we expect to play out in the T-bills market, as players also wait on the outcome of both the MPC auction, MPC meeting, and the bonds auction that is happening this week. That will be all for fixed income. Thank you very much.
Thank you. We will now move to Temple from Frontier Africa Reports for their own Pan-African updates. Good morning, Temple.
Good morning, and thank you for the opportunity. Our first port of call is the Eastern African markets, where the Central Bank of Kenya reported that their auction held on Thursday, 18th of March, was successful. They accepted some 23.3 billion shillings in the weekly T-bills auction. Bids amounted to 27.6 billion shillings. One-year treasury bills was the most attractive, with bids worth some 15.1 billion shillings out of the 10 billion shillings that was on offer. And they accepted, I think, 11.7 billion or thereabouts, with a performance rate of 150%. The 6-month T-bills paper was the least attractive. Bids worth some 6.1 billion shillings were accepted out of the 10 billion that was offered. Then you have the 91-day T-bills receiving some 5.4 billion shillings out of 4 billion shillings that was on offer. They accepted the entire 5.4 billion shillings and the performance rate of around 135%. And moving on, the Kenyan government and the United Kingdom both launched a business regulatory toolkit for small and medium enterprises. It's a free online resource scheme. It aims to improve business access to legal and regulatory information for SMEs that have really lost the funds and investments due to the impact of COVID in recent time. We all should remember that the same Kenya and UK recently signed an agreement to export more to the UK under the Brexit and individual Commonwealth members country program that they're having in recent time. I think around 80% exports will be made available to the UK. So it's part of the reasons why this scheme is coming into play. Madagascar, we'll move on to Madagascar, where the IFC and Orange Money have partnered to advance digital finance there. Madagascar has the world's lowest level of financial inclusion, with only 18% of the adult population owning bank accounts. That was as of 2017. So with this synergy between the IFC and Orange Money of France, the objective is to explore the possibility of revving up mobile money and all the other digital offerings in that country. And it's the first large-scale advisory engagement between the IFC and Orange Group, focusing on mobile money. And the Africa Development Bank also signed a $229 million deal with Uganda. The facility will help them to support the first phase of the Kampala-Jinjan Expressway project. It is something that will also help to cut down travel time and boost trade along the route, which is a major link to neighboring countries within the East African community bloc. Then in Mozambique, the central bank kept rates on at 13.25%, and the upside inflation projection that they're expecting. In West Africa, the AFDB floats prices some $2.5 billion global benchmark bond at 0.87% due March 2026. The 5-year bond, yes, 2026. It's the first dollar benchmark bonds this year. And the transaction is also the AFDB's largest 5-year global benchmark ever issued. The largest overbooked achieved for a 5-year benchmark program as well. We all know about Fitch ratings, keeping Nigeria's rating outlook is stable. See inflation at 16% in 2021. Then for UMOA, that's the West African Economic and Monetary Union, Togo raised 22 billion CFA in stimulus bonds. They had done two past successful bond raising. They raised some 62 billion CFA in their two previous issues. They were quite successful as well. Last one, which was I think on the 19th, right, thereabouts, was also very successful. Ghana is setting its initial price guidance for the three-year bond between 17.3% and 17.7%. In Southern Africa, yes, cryptocurrency in South Africa, the Financial Sector Conduct Authority issues a second warning as consumers continue to lose money in their investment in cryptocurrencies. In the last 3 months, they noticed that financial consumers have actually lost more in Bitcoin, a couple of others. Investec, which is a major company in South Africa, also its profits declining by 29%. For Namibia, their public debt has risen by 76.25% to 140 billion Namibian dollars. That's as of 2021. So that's the Ministry of Finance. In northern part of Africa, Agilis, which is a financial leasing company, plans to raise its portfolio value to $2.3 billion by the end of this year. In Morocco, bank liquidity deficit has widened by some 3% to 68.3 billion dirhams. Then finally is Tunisia, which just announced Ashraf Tassim as the new AFDB country director for. These are headlines on Frontier Africa reports for today. Thank you.
Thank you. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and we will give you an opportunity to speak, or you may use the comment function. And this is the same for those joining us on Facebook. But before we take questions, a quick announcement. On Wednesday, the 24th of March, 2021, Mr. Adebola Olatubosu, who's a senior analyst at Adova PLC, excuse me, will be joining us on our breakfast meeting to talk about the implications of a subsidy regime on the downstream sector. If you would like to, the meeting will be held during the breakfast time, so there would be no need for us to send you a link. So now we can now take questions. If you do have questions, again, you can raise your hand and we'll give you an opportunity to speak, or you may use the comment function. I see Chima has her hand raised. You can go ahead and speak, Chima.
Good morning, everyone. My question is to Omarege. So last week or mid last week, the Fed confirmed that they were sticking to their zero rates. So I know that you already gave us your guidance or rate forecast for what you expect rates to be in the short term, but how significant do you think this would impact rates here? And yeah, do you think it would impact rates, and how significant if you think so?
Okay, Chima, thank you so much for that question. Okay, before the rate cut that the Fed did on 15th of March this month, they did a rate cut 2 weeks before that, and that was about 0.5% reduction and emergency rate cost. So they did another one 15th of this month, 1% emergency rate cut. And just to note, this is the largest single rate cut that the Fed has done in over 100 years from now. So basically, the reason for this is to kind of like mitigate the disruption that has been caused to the economy by the pandemic. So they are trying to make it cheaper for people to access funds and everything. So what this basically translates to is that anytime there is a rate cut, the returns on the US Treasury notes also reduces. So the way it affects Nigeria is that foreign portfolio investors, given that they are being offered lower returns now, will probably want to move their funds to the Nigeria almost space. So this basically translates to us receiving more FPI inflows. But from trend, it has not always been like this. In December 2016, when the Fed did a rate increase, so what we expected then was that the first quarter of 2017, there will be reduced capital inflows into the Nigeria almost space, but that was not what played out. Like I already explained, when there is a rate cut, that also translates to reduced returns on the US Treasury notes. So also when there is a rate increase, that translates to increased returns on the US Treasury notes. So like I said, in December 2016, when there was a rate increase, which automatically translated to increase in returns on the US Treasury notes, we expected capital importation into Nigeria almost space to reduce, but that was not what played out. Apparently, what we saw was increased capital inflows into the Nigeria almost space in the first quarter of 2017. So taking a cue from there, ideally, all things being equal, with the rate cut that was recently implemented by the Federal Open Market Committee of the Federal Reserve Bank of the US, rates are supposed to go up on the US Treasury notes, which will translate to reduced capital importation into the rates are supposed to decline on the US Treasury notes, which will translate to increased capital importation into the Nigeria OMO space. Currently, the OMO levels are around 10%, 10.1% for the long end. So we have seen that the CBN is keen on attracting FPI inflows into the Nigeria OMO space to kind of like augment the declining Federal Reserve, FS Reserve that we have in the country. So I expect rates to maintain because ideally capital importation is going to increase, but I don't think that's going to significantly impact the current OMO rate. So I expect improved capital importations, but no significant change to the OMO rate. I hope that answers your question.
Yes, it does. Thank you, Omarige.
Hello, Morgan. It seems we have lost you.
Hello, can you hear me?
Yeah, we can hear you now.
Okay. Sorry, at what point did you lose me? I thought Chiman got everything I said.
Your mic cut off for a bit when you were rounding up with your statement.
Okay, what I said is basically my conclusion is that my expectation is that there will likely be increased capital importation into the Nigeria OMO space as the FPIs look for alternative investment outlet for their funds, given that there will be reduced returns on the US Treasury note. But I don't think that there will be a significant change on the OMO rate. I think that will maintain because it's actually at very good levels, 10.1%. So that's it.
Yeah, okay. Thank you very much. We have another question from Sheung, and it's to the economist. He's asking, what is Vetiva's projection for the MPC outcome tomorrow in terms of rate? I believe Moshepe would treat that question. Good morning, Moshepe.
Good morning, Chidozie. Good morning, everyone. Our expectation is that the MPC would hold at today's meeting. It makes sense for them to hold because there have been recent policies in the FX space, which they would likely want to give some time to see how those policies would impact foreign exchange inflows before they even tamper with rates. So even if we're going to see any movements in rates, there have been indications that they're likely to tighten this and that. I don't think it's going to happen at this meeting just because they need to give some time for recent policies that they implemented in FX markets to actually kick in and weigh the impact of those policies on the economy before they actually move the rates in either direction. If there's any. I hope that answers your question.
Shimon, I hope that answers your question. Thank you, Moshepe. I believe Dapo I noticed that Dapo's hand was raised earlier, but it's no longer. Dapo, is there something you wanted to add?
No, it's okay. It's fine. Thank you.
Okay, all right, thank you, Dapo. Do we have any further questions? Okay, if we have no further questions today, on behalf of Vetiva and media partners at Frontier Africa Reports, we would like to thank you for joining us today. We continue to encourage everyone to remain safe, and we look forward to having you join us again tomorrow at 8:30. We hope everyone has a good day. Goodbye.